wherever you need to be directed to, right? So once we get that offer in and we are we reach an agreement with the seller, we are now officially under contract. And what does that mean, right? Now that means that the process has really, really started. Typically, that's about a good 30 days before then we get to the final closing. But guys, throughout the process, we'll have inspections that I say, yes, yes, yes. Get home inspection done on that home. You never lived in it. You do not know if anything is wrong with that property. So yes, get a home inspection done on that home, right? And from there, we will negotiate. If there's any repairs that's needed in that property, we will negotiate with the seller and ask them. We have to request, right? So I can't demand the seller to do any kind of repairs. However, it will be in their best interest to get something done, right? So we can go ahead and get this house moved, right? So once you guys reach an agreement with the sellers with the inspection, then we move on to the next phase, which is the appraisal, right? So your lender, Carly, will then go ahead and order the appraisal for you, right? And now we're hoping that the home appraises at value or above value. But in the event the home does not appraise at value, guys, then we are back at negotiation with the seller, right? And then once we reach that negotiation with the seller, whether they're going to reduce their price down to the appraised value, or you and the seller reach an agreement where, hey, you'll fill half of the gap and the seller fills half of the gap. But once we reach that agreement, then the transaction just go right on to the next phase of it, guys, where it goes to the underwriter, right? The underwriter is our friend. In most cases, right? But what you want to understand is the underwriter is not out to get you, right? They are checking the checks and checking the checks because they are lending you hundreds and hundreds of thousands of dollars. So they want to make sure that you're going to be able to pay them back. All right, guys? So that's all that the underwriter is checking for. But once we get through that phase, guys, guess what? We're at closing. And as quickly as I said that, yes, it goes that quickly, right? I want people to know real estate is just like something else, that it has a process, right? I do this every day. Carly do this every day. So therefore we are abreast of the process that it takes to purchase a home. So that's why we're here sharing our knowledge with you guys, letting you know that this process is really not that hard. Is it a little tedious? It just depends on case by case situation, right? Because if you listen to us and the lender says, hey, turn in this document, or if I say, hey guys, we have this deadline and we need to meet this deadline, as long as we're moving according to the process and within the timeline, guys, it is not that stressful. And with all this free money that's out here, guys, that Carly is getting ready to share with you, the process is not as hard as people make it out to be. All right, y'all. So let me see what questions you guys may have for me before I go ahead and turn this over to Carly. Something I see, black sunrises. You say no matter how many times I tell TikTok I'm not interested in blacks, I still get more blacks. Oh, I'm so sorry. I'm so sorry. Well, you don't have to join this right now, Black Sunrises. Sorry that you were disturbed. But if anyone else on here have any questions, feel free to ask your questions and I'll check on them, okay? So hello to everyone that's joined. I'm going to go ahead and turn this over to my preferred lender, Carly McLeod.
Hey guys. Hey, so I think sometimes we take for granted that people kind of know what each of us do, but I'm going to just break it down really quick for you. I am your money person, right? I am the loan. I am all things, anything to do with the money piece of it. So I sit in my cave-like environment here all the time and run numbers for you. Keneshia is the one that gives anything related to the house. So you want a 3-bedroom, you want a lawn, you want a condo, whatever it is, those are all Keneshia questions. She's the one that's going to take you to the properties, the properties. She knows what to look for inside the house. I have never had this woman come back with an appraisal that didn't work out. So you're in good hands with her, with anything related to house. So we kind of yes, I'm telling you, she knows what she's doing. So you kind of start the process with me. You talk to Keneshia first, and then we connect. And what I do with you is I run the numbers with you, right? So it can feel a little invasive, but basically I'm going to get all of your financials. So we're going to talk about credit score. We're going to talk about your income, whether that's a W-2 job, whether you're self-employed, whatever that is, and any money that you have that could go towards down payment, closing costs, all that kind of stuff. And one of the big things that we want to talk about tonight is that piece of the puzzle, because I know one of the, we call them pain points that people have a lot of times is everybody's broke. Nobody, everything's just expensive now. Everything costs more than it used to. And it's hard to save money to be able to afford to buy a home. And we understand that. So we have several different ways for you to get money for closing. Okay. Now, if you are one of our military in this country, like Keneshia is, active or a veteran, a VA loan is an awesome product.
Yes.
A VA loan is an awesome product because it is a no down payment product. Now, and when I say that, I think it can be confusing because then that people think that means automatically no money at closing.
No money.
But you have to. We're gonna tear apart two things. So there's a down payment, which is you know what a down payment is. You have to put down a percentage of the cost of the home to be able to buy the home. VA has no down payment, but that does not relieve you from something else called closing costs. Okay.
Exactly.
So closing costs include a lot of things. They include our lender fees. They include the appraisal, which we kind of touched base on. That's something that you can pay up front. I do usually allow people to pay it at closing if you prefer, with the understanding that if anything happens that you don't close, you have to pay that because that's work that's being done the same way when you have inspections. That's work that's been done. It has to be paid for whether you close or not. You have your escrows, which is basically a holding account that holds your money for annual renewals of insurance and taxes. And you have all of the title costs, which is all the lawyer costs. So this is stuff transferring ownership of a home from one person to the other, all the taxes that are involved in that. Those are the big main costs of closing costs. So unfortunately, even if you don't have a down payment, you will always have closing costs because even if your lender comps your fees for whatever reason, you're still likely going to have escrows. You're definitely going to have charges from the title company or the lawyer that transfers the ownership into your home and ensures that when you're buying a home, there's not some person out in Kansas that has some sort of claim to your home. It's called title insurance for a reason. Title insurance, unlike other insurances, works from your purchase backwards. So if anybody comes along and says, hey, I own this property back in blah, 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 and I never sold it and this house belongs to me, your title insurance protects you from that. Any other liens that are on the home if the current homeowner has unpaid taxes, some sort of random lien that the HOA has put on, all of that is protected. So we have a lot of different ways for covering those costs, right? Obviously, everybody knows you can pay for it out of pocket, right? That's common. If you have any savings, that's not for everybody. So we have a couple different things too. We have in Florida, especially, we have some really, really good down payment assistance programs. So Florida Housing and even where Keneshia and I are in Jacksonville have some specific Duval County, Jacksonville area specific programs. These are typically not grants, though. I want to make sure that you guys understand that up front. These are sort of like silent second mortgages, which means we give you the money. There's no payment on it, nothing like that. The only kind of caveat to it is eventually it has to be repaid. I think of it as like a paying it forward. The county or the state will give you money to get into the house. As long as you're in the home as your primary residence and you don't refinance the home or sell it, or let's say turn it into an Airbnb, something like that, you'll forget about that money. But when you go to sell it, if you stood to make $100,000 on the home, now you're making 90 or whatever it is. Basically, whatever you owe will come out of that and will go back into the big pot of money that then the next person will have to buy the home. And then when they sell it, their money goes back in, so on and so forth. A lot of these programs have really competitive interest rates, which is awesome. We love that. Florida housing products don't charge you through the roof. They don't have a ton of crazy fees either. It's a really awesome way to get in the home. We have $10,000 programs that are pretty much year round. In Florida, we also have
Mm-hmm.
something called Hometown Heroes. So
Yeah.
that's meant for all of our like frontline people. When we think back to COVID, this is obviously our military, but it's also teachers, nurses, firefighters, police officers, and it's even people who work in that industry as well. So if you work at a hospital or a doctor's office, you don't have to be the doctor or the nurse. You can be the receptionist, or if you're an in-home therapist or something like that. I'm working with some right now who is the manager of the cafeteria at a middle school. All of these people count. So it's not just the sort of teachers, doctors. It's all the staff. You have to be working for a company that is based out of Florida, because the intent of this money is to keep it in the state of Florida and funding buying homes in the state of Florida. So if you work for a company that's based out of Kansas, that's who you report to, that won't count. It's basically keeping it all in state. You have to be whatever your job considers full-time, because some jobs that's 30 hours a week, some jobs are 35 hours a week, sometimes that's 40. Whatever your job states is full-time, that's what they care about. And a 640 credit score. And your income has to be, it varies county to county. Some of the bigger, like if you go down to Miami, which has a much higher cost of living, you can make more. But for example, in Duval, if you're a two-person family, it's somewhere around $100,000 total household income. So even if somebody's not on the loan, everybody in the household that's over 18 that makes money will count. Even if we don't touch them on this application, even if they're not on anything, they still count because they're in the household. And that has a super competitive interest rate because it's specific and a lot of people don't qualify. And this program does run out of money, but it's been so much slower this year because they added those job specific requirements, whereas before it was open to everybody. And the beauty of this loan is it is 5% of the loan amount. Okay. So anything over $200,000, it's going to be more than that $10,000 that some of the other programs get. So if you're buying a $300,000 house, that's $15,000 towards closing costs and down payment.
Nice.
So it's a really great program that will run out of money eventually, but it's actually been going really slow. Normally, Hometown Heroes runs out of money in like a month or two, and it's already been 3 or 4, and we still have money.
Wow, because it's waiting on these people right here. So if you guys are on this live right now, listen, the money is still there available, but once it's gone, it's gone.
Yeah, it'll come back next year.
The
program changes a bit from year to year, but typically it refunds on July 1st. But those other programs that I told you about, the 10K, year round. Those don't run out of money. Those are good to go year round. And even if for whatever reason, you have no savings, you have the down payment assistance doesn't work for you. Let's say your credit score is a little lower, you're under that 640. Well, number one, we can work on a credit plan. That's always an option.
Yeah.
We do free credit plans. It's not free to do whatever you got to do to fix your credit. That may involve money, but we can do a free credit plan to tell you what it would take to get you to a 640. In some cases, that can be quick and easy. It could be as simple as opening up a new credit card and just keeping the balance low. And some people, it's a long process because we have a lot to work on, but we get you on a path towards that. Now, if for any reason that's not an option, we still have 2 other ways to get money for closing. Something that's super popular now because it's kind of a buyer's market is something called seller credit. So seller credit is, and Keneshia can go into more how she decides what is and isn't available to you, because this is something that you negotiate with the seller. Basically, it's money that the seller agrees to pay at closing. And what I love about seller credit is this is not money that you pay back, right? This is money that the seller gives you at closing, and it is not some silent second like a down payment assistance is. This is just money that they give you at closing. The only caveat is it can only cover that closing cost piece. You have to fund whatever your down payment is. So this is great for veterans because if you already have no down payment, that can cover all of your closing. It happens all the time. Keneshia and I just closed one, or about to close one that they won't pay anything out of pocket, which is awesome. So that's a great option. Seller credit is as Keneshia, I'll let you speak a little more on this, but it's seller to seller. So they have to agree to this. And a lot of times it has to be sort of a trade-off. Like,
yeah,
however much money you want in seller credit, let's say $10,000, you probably are going to have to raise whatever offer you're making on the home by some portion of that, because the seller is going to look at it as, here's your purchase price minus whatever seller credit I'm going to give you. So they're netting less. So I'll let you speak more about that, because that's kind of your part.
Right. Yeah, Carly, and I'm glad you touched on that, because I think a lot of times people have this misconstrued information, and let me flip this thing right here back around. They have this misconstrued information that they can just purchase for nothing at all, and that the seller is supposed to take care of everything, and that's so far from the truth. I like people to understand that the seller has their fees as well as the buyer has their own fees as well. But what I like to do, come in as your real estate agent, is negotiate with the seller. Like, hey, seller, it's going to cost you more keeping this house on the market as long as you're keeping it, versus, hey, let's negotiate a few incentives and let's get this house moved. So with doing that, I get with your lender, Carly, and I find out how much closing costs we need, right? And from there, I then go and talk with the seller. Like Carly touched on, sometimes you may have to increase the sales price in order to get those costs in there, because by right and fair, let's say these people are selling their home for $200,000, and then now you are a stranger coming in saying, hey, let me get 10,000 of your $200,000. These people don't know you, right? And so you have to think of it on that aspect, that they're helping you out. The seller is actually helping you out by saying, hey, I'm going to give this towards your closing costs. So what I like to do too is, when I do my market analysis, is to be open and transparent with my buyer and let them know it may be some room here, because the sales price is at 200, and this is showing me that this house is actually worth maybe $220,000, or actually $215,000, or whatever it is. It's above whatever the sales price is. That then allows me to know, hey, we may be able to have some space to put those costs into that loan. And so that's what Carly was touching on, guys. Okay.
Yeah, and
Back to you, Carly.
The last one that I'll touch on too, that you may or may not have heard of, is you can have a family member that gives a gift. If you have a parent, a grandparent, a sibling, any of those things that are willing to contribute money towards your closing costs, they can absolutely do that. And that's one of those things where there's not a limit on, per se, where they could cover your down payment and your closing costs. Unlike seller credit, that can only cover your closing costs. That can be a gift from family, $5,000, $10,000, whatever the case is. It goes towards your total costs. And the beauty of all of this stuff that I've stated is you can add it all together at the same time. So you can get down payments, you can get seller credit, you can get a gift from family, you can do all of those things together. And then obviously you can use your own funds whenever. Another thing that people don't realize is, let's say you have a 401k. I know everybody sort of has in their mind their 401k is just frozen. Like, I can't touch this until I'm 62 or whatever the age is. That's not true, actually. So there are some companies as well have specific rules in place for buying a home. But I think most every 401k will let you do a loan against your 401k. And if it's a loan as opposed to a full withdrawal, you don't get taxed on it the way you would if you just take the money out. And what they typically do is you just pay it back a small amount every month until it's repaid. And we as lenders don't look at that as some new debt that you're taking on, because that's your money that you're paying back to yourself.
Yeah.
So it's something, and usually you can take out something like up to like 40 to 50% of whatever's in your 401k, or at least whatever you've contributed is usually allowed. So there's another kind of pot of money that you may not have had in the back of your mind that you're contributing to every month, that your employer is contributing to every month, that's just sitting there, and it is usable when a lot of people think that it's not. And like I said, you just repay it back over time. So you're going to have a payment plan set in place. You're not going to have to make a payment anywhere. It usually is just taken out of your paycheck. And then slowly over a few years, you have that repaid, you're whole. Your money is still growing in your 401k and you're in your house. So again, another one of those things that can be combined together. So you see, you've got, I think I mentioned like 5 different avenues for money that you can access that maybe you didn't know that you could. And you can mix and match these however works for you. And that can get you to the closing table. And some of these, especially on the VA loans, and there's another loan called USDA loan that is also a no down payment type of loan. That one is specific to rural parts of the country, which is basically mostly anywhere outside of the city. So if you are somebody that's in Jacksonville, like Keneshia and I are, it's not going to be Jacksonville, but it's going to be McClenny,
Middleburg,
Callahan, you know, all of those kind of.
Even Middleburg. Middleburg,
absolutely. Clay County, a lot of that area. It's honestly the majority of the country. It's really just the city hearts that don't count in that. And that's another one where you have no down payment. And even if you do go conventional or FHA, because those are the 4 main loans. We got a conventional, an FHA, a VA, and a USDA. Conventional, if you're a first-time home buyer, is 3% down. FHA, no matter whether you're a first-time home buyer or not, it's 3.5% down. So a lot of people think too this day and age that you have to put 20% down, and you don't. You don't have to get to where you have 20% of the home value, especially at home prices now. A lot of people just don't have that. It's not nearly as much as you think it is. So there are avenues for you, and we just have to talk about it beforehand and just let you know what's available. And you could absolutely come to the closing table with little to no money.
Absolutely, Carly. I'm seeing it all the time, and I don't think people really understand that you can really purchase a house with little to no money out of pocket, right? And so what does that look like? Like I tell people, you'll have your earnest money, you'll have your inspection and the appraisal. Those are your first upfront costs that you will have in the transaction. What does that look like? Earnest money, typically around $1,000, depending on the sales price of the house. Inspections could be about $600, and then you're looking at appraisal that's another maybe $600, and that's on the high side, right? So easily maybe $2,500 you'll need to start the process. And then Carly just shared with you how many other options of down payment assistance, closing cost assistance programs that's out there. So you truly can purchase with little to no money out of pocket.
Yeah, you really can. And even the appraisal, I let people know, especially when they're in a program like down payment assistance that's going to cover everything. As long as we're on the same page of knowing that, like, hey, if anything stops you from closing, you have to pay that. I'm totally fine with allowing you to pay that at closing. So that way your down payment assistance covers that. In which case you don't need to pay that out of pocket. It's a little bit risky because sometimes if the home doesn't close, people then don't feel like they want to pay that anymore. But again, the work has been completed the same way. If somebody did an inspection on your home, if somebody put a roof on your home or fixed plumbing or something, that's work that's done and has to be fixed. And we as the lender don't technically require the inspections, but Keneshia and I will both tell you we highly, highly, highly recommend you do them. Not only just so you know what's hiding in the walls and the ceiling and then under the house and all that kind of stuff, but once you know, you give Keneshia the power to negotiate getting paid for those. Because if you close on an inspection and there's some $20,000 crack in the foundation that you had no idea was there, you're closed, and that's on you now. If Keneshia knows about that, Keneshia can go back to that seller and be like, we're not moving forward unless you pay for this.
That part.
So she's worth her weight in gold when you bring the knowledge that she has into the transaction.
I agree. You too, Carly girl. You too, girl.
We're not part-time realtors and loan officers. This is our full-time job. We're not doing this on the side. You know?
We do this in real life, y'all, in real life, and we're here trying to spread the word. It's 7 o'clock at night. We could be with our families, but we decided that, hey, let's try this. Let's share the word. Let's give people this information that we have. A lot of you are working throughout the daytime, so you cannot jump on our lives then if we put it on. So therefore, we decided to come at night. So if any of you guys on this live know someone else that may need this information, let them know we're doing this every month, right? So we'll announce to you guys in another week or two when we're going to have the next one. So you'll know in advance, and then you can tune back in with any questions. I really didn't see any other questions to answer, but if anyone else is here on the live, Horace is behind the scene. Horace, do you see any questions for us over there? Hi, Bionic Legs.
I know.
Hi,
No questions
Myra.
there.
No questions back there for me? Okay. All right. Well, I appreciate it. So everyone here that joined the live, hello. If you guys have any questions for me, feel free to DM me, guys. I would love for you to DM us your email address. That way we can go ahead and send you out some home buying information. And as more down payment and closing cost assistance programs come out, we'll be able to shoot you all that information right away. So if you can, just go over to the DM real quick, DM me your email address, so then I can go ahead and send you out whatever information from Carly and I that we're teaching from tonight. Okay, guys? So Carly, you have anything else you would like to add?
I don't know if I have anything else if there's no other questions.
Okay.
I would say, do we have the slide with our contact, our email and our phone number and all that kind of stuff? Maybe, of course, do you have that to put up that maybe people can screenshot or whatever if they need to reach out? Because I know that some people may be weary to put personal information in a chat or anything like this. And so if you guys need to speak to us one-on-one, we're always happy to do that. So that you can get more personalized attention if you have any questions on the qualification process. It doesn't usually take very long, especially if you're straightforward W-2 type of borrower, salary or hourly, something like that. But feel free to, if we have that slide, pop that up, and maybe we can set up an appointment with you guys at no cost. There's no cost to any of this, by the way. When you, even if you're unsure of if it maybe right now is not the time for you, but maybe you're thinking you're going to go a year out or something like that. It doesn't hurt to go ahead and check out your finances, see if there's any kind of skeleton hiding in the closet that's going to prevent you from being able to buy. An example of that is going to be something like if you've had a bankruptcy or foreclosure or anything like that. Those can be immediate hard stops, not permanent, just something that we need to be aware of and when you can start again. But there's no cost to it. I do a soft credit pull. That's how I would do a credit plan for you if that was needed. That's how we process your application to begin with. So there is no cost to do this. All it is a soft credit pull. That's not going to be a ding against your credit. So feel free to reach out. Let us make sure that we're on the right track, or at least we can tell you how long before you will be eligible and on the right track. I would just say get that process started. Let's see where we are. That way we're going forward informed, making sure that we're on the right path. Because let me tell you guys something. If you are somebody that's in need of credit repair, it is often super counterintuitive what helps and hurts your credit. I can tell you. It's like you think, oh, I'm going to pay that whole card off and that's going to boost my credit. When sometimes it does absolutely nothing. You end up spending thousands of dollars paying down a card that didn't help you.
Exactly.
It doesn't make sense. It doesn't always make sense. But let's go into it thoughtfully with a plan in place. And then when I've got you ready to go, I'm going to pass you back to Keneshia and she's going to find your home.
Exactly. I don't know if Horace knows where that slide. Horace, do you know where that slide is at? It's the PowerPoint slide.
It's at the very end.
Let us know if you're getting to it, Horace. If not, just let us know.
No, I don't have it right now.
Okay.
Okay. All right. Well, that QR code that you just had up there, if you don't mind, can you just put that back on the screen for us? Then they can at least just scan that QR code. Just put it on the screen for us, just a couple minutes that you just had up. That's on the the veterans posting that I had. Mm-hmm. Okay, guys, just trying to get this information to you guys. That's all. So you can have our contact information.
I think I've got it. Let me scroll to the end here.
Mm-hmm.
Here.
So I'm just leaving a meeting right now, guys. So I'm not even in front of my computer. You see, I'm using my phone right now. But we were determined to get this information out to you guys tonight.
Yeah. Here, let me. If you want me to share my screen, I've got the slide up here.
Okay.
Let me do that. Share screen. I'm gonna do that right now. Let's see if I can.
Are you guys trying to see something different from what's up?
Let me see. Here you go. Let me see if that comes
Yeah,
out.
that right there.
There you go. If I can make it. Oh no, see that probably I'll get through it again.
Mm-hmm.
There we go.
No worries.
Does that help?
Mm-hmm. All right, so there goes our, let me try to focus it in. There it is. That is our contact information right there, guys. Feel free to send us some emails. That's our cell phone numbers right there.
Mm-hmm.
Reach out to us. All right. Trying to focus it good. Yep, right there. Good job. Good, good, good. Good, good, good. Yeah, so this was awesome.
Yeah, always.
Yep, I don't see any questions here. I don't see any questions. Oh, but wait, Carly, I wanted to touch real quickly, right? I've been hearing a lot in the news about this 50-year mortgage.
Yeah.
Yeah. And so, of course, I had to come to my girl and ask her, what is your take on this 50-year mortgage?
Yeah. So number one, these don't exist yet.
Okay.
Unless it's like some private bank or something like that. Maybe there are some of those that exist in the country. They don't exist yet.
Okay.
What I would tell you is, I'm trying to be brief because I could get wordy over here. I think 50-year mortgages could serve a purpose if it's something that helps you qualify and get into the home. I think they are not a long-term permanent solution.
Right.
The reality of the matter is people want them for the purpose of being able to qualify for more home or making their payments lower, right? Those are kind of things that go hand in hand. If your payment is lower, you're qualified for more home, because we look at something called a debt to income ratio, which is exactly what it sounds like. We compare your debt and the cost of your monthly payment on your new home to your income, and it has to be under a certain percentage. Think 50-ish% of your debt to your income, which is everything from your credit report, the new monthly mortgage payment that you'll have, and divide that by your total income before taxes, all insurance, all of that kind of stuff is taken out. We typically need to use the full thing. So a 50-year mortgage could give you a little breathing room to qualify for that, because you're taking the same cost of a house and stretching that payment out over 50 years as opposed to 30. So you should theoretically qualify for more. But the downfall of this program is if you never make any additional principal payments, you never pay anything but your monthly payment for the entire duration of 50 years. If you're alive by the time you would be Because I don't know if you know this, but the average first-time homebuyer in the United States is now 40 years old. So if you were to get into a 50-year mortgage at 40 years old, if you make it to 90, you will still be paying your mortgage at 90, which is insanity. And the interest that you'll end up paying by the time you're done with it I think I ran the numbers on a $400,000 house. Over 50 years, the total amount of principal and interest that you will pay is something like $1.3 million. It's crazy. So if you go into that and you only ever make the required monthly payment, you never put any extra money into principal, you never make any sort of lump sum deposit into the home, I couldn't recommend that. That's just it's the amount of money that you're saving a month is not worth $400,000 of extra interest. It's just not. But if these become available, because like I said, they're not, and it helps you get into that home, it helps you get out of this rental trap that exists in this country, and it helps you start building equity, albeit slow, because it's going to be slower than a shorter term mortgage. And you go into it with the game plan of knowing, like, hey, when I get that promotion, hey, when I get my car paid off, or whatever the case is, and if I have some free money every month, I have got to refinance into a shorter term. If you keep that in mind and you go that route, then I could see it being an effective tool to get your foot in the door. I just don't think it's a long term. You just pay too much interest. It's crazy. It's astronomical.
That interest is crazy.
It's wild. And the thing that I worry about too is when you look at interest rates, the way that they're priced in general, the shorter the term, so like a 15-year mortgage or 20-year or 25-year, the shorter the term, typically the lower the interest rate, right? You get a little bit of break on interest rate by selecting a shorter term because you're going to pay it off quicker. The banks like that, obviously. They like to get all their money as soon as possible. Makes sense, right? So you have to think, okay, if we're going to do a longer term, what is that likely going to do to what the interest rate is going to be on that mortgage? It's probably going to be higher. So, sitting here going, if that's a thing, is it really going to be a low enough payment to make enough difference to benefit you?
No. The only benefit that I'm seeing so far with this, Carly, is if, hey, you see yourself as a long-term renter already, right? Then, hey, might as well go ahead and get into this loan here that you're at least building a little equity and not just throwing away a security deposit. That's the only other offset to this that I see is, okay, you're a renter, you've been renting, and you don't feel or see that yourself going to be anything but a renter for the rest of your life, then might as well just put that rental income into some type of an equity basket, which is a 50-year mortgage in a sense.
So I have a whole thing on this on TikTok. It basically says what I told you. You would be even if you're in a 30-year mortgage, you go in at that, you would be shocked and surprised to find out how little you have to pay extra a month to make a huge dent in your mortgage. Dave Ramsey has a payoff calculator, and I know he's kind of controversial. Not everybody likes him, but just for the purpose of the payoff calculator, if you go and look at your mortgage and you pay an extra $100 a month or something like that when you can, especially if you do that regularly, you'll cut years off of your loan. Years off of your loan to pay off early. So I highly recommend, or a good strategy as well, is make a payment every 2 weeks as opposed to once a month. If you make half a mortgage payment every 2 weeks, because that's the way most people get paid. Most people get paid bi-weekly. Make half a mortgage payment every 2 weeks. By the end of the year, you'll make one full extra mortgage payment a year, and it'll all be principal. So it doesn't feel like okay, I'm saving an extra $2,000 or whatever a month to contribute. You just go, okay, every time I get paid, $1,000 goes to my mortgage or whatever it is, and that's just a constant. And you'll cut years off of your loan like that too. It's a great strategy if you can afford to do it, or just whenever you're able to.
Whenever you're
I do
able
that.
to. That's a great pointer from a mortgage loan officer, guys. Great pointer. Pay that mortgage off sooner than later. That interest will
Yeah, you
kill
just
you.
yeah. If you see how much total interest, like that $400,000 loan that I told you about, I did the
Hmm.
numbers at like a 6% interest rate, which is fairly average for right now. Over 30 years, if you never make an additional payment of any kind, you'll pay $436,000 or something like that in interest total over that time.
Mm.
So it's more than double the price of the home. So that's why I'm saying, it feels, maybe it feels like it's strapping you, but when you look at the
Hmm.
end of it and you say, oh my God, I paid an extra $100 a month and I saved $50,000 in interest over 30 years, like that's crazy.
That
Um,
is.
Play with that calculator, it'll blow your mind. Or even just
One
tax
question
that.
I have here. I have a question on here, Carly. It said, "What's the veterans promotion you're running?" Okay, so somebody must have seen a post that I've made on TikTok. So, just to go over that, guys. So that promotion is for our military members, going on this month of November, in appreciation for our veterans. What we're trying to do is to show you, as like I was saying with Carly here, how to purchase a new home with no money out of pocket, because it's possible. You have no down payment, and then you have the sellers that's helping with your closing costs, guys. So with this promotion, and I'm taking it a step further, Carly, what I'm doing is to show our veterans that they can actually really purchase a home without no money out of pocket, is I'm helping them with their binder, right? So what happened was, there was a military, they were retired. They just didn't have the funds, right? They didn't have the funds. He was a double amputee. They were traveling all the way to Gainesville Monday, Wednesday, and Friday for his VA hospital appointments, right? And of course, that's a strain on anybody, right? And so they did not have any funds in the bank, right? So I found a house for them that they really, really loved, but they just did not have the earnest money. And so we were going to have to just terminate, because without the earnest money, the deal cannot go forward. And I was like, no, 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 no. I got with their lender and seen, and asked whether or not it's, lawful in a sense, right? Because you want to make sure you do everything in the parameter of the law.
Yeah.
And I wanted to make sure, it's lawful that me, as their real estate agent, is able to help them out in that sense. And it was, right? So I was able to then write a check to the title company for their whole binder amount, right? It was $1,000. And then that allowed the deal to continue. And like you were saying about the seller concession, Carly, I was able to then negotiate with the seller for all their closing costs. So these guys were truly able to move into this home with no money out of pocket, because I took care of the binder for them, right? And it was something that I would do over and over and over
Oh,
again,
yes.
Carly, without
Yes.
blinking, because I saw that these are two disabled veterans, right? Living in a motel. Living in a motel, and he has dialysis appointments Monday, Wednesday, Friday, and he has to drive all the way from Jacksonville to Gainesville every
Mhm.
Monday, Wednesday, and Friday. And,
5 hours
and
of
I said,
driving.
no. And just for $1,000 for me to give another veteran $1,000 to get them out of that situation, I would do it over and over again, to
Yeah.
just know that, hey, they have served this country, right? Now let me serve them. So that's what, my veterans promotion is for me to really, really, truly show other veterans out there that you can be in a new home, you can be in a home, and it doesn't have to cost you an astronomical amount of money, right? It may cost you 500, it may cost you 1,000, but we're not talking about no 10,000 and 20,000. You're not paying those prices with me.
Right.
No, you're not.
And at
Okay.
Fairway,
So
Fairway too, we're big on veterans. We have Red Fridays every Friday. And
nice,
I'm not a veteran, but my dad is. So it's also
nice. Okay.
something, yeah, my dad's an Air Force vet. And so we have something at Fairway also called American Frontlines Rewards. So it's
Okay.
$1,000 that we do towards veterans as well. So
Oh,
we are also willing to put our money where our mouth is. I can almost always when needed, work out getting either a lower interest rate, a credit for your appraisal, something like that. If we are in a bind, it makes absolutely no sense to me to sit here on my hands and say, nope, I'm not doing this unless I collect my full commissions. That's stupid. No,
exactly. Like, come
if
on.
we have to go in our own pockets to get people in homes,
Right.
why would we sit here and nobody get anything? Our veterans don't get their houses. Keneshia doesn't get paid. I don't get paid. We're not going to do that.
Right.
We
Right.
would rather take half of what we would make and get somebody in a home than let them sit there and everyone goes without. No, absolutely not.
Exactly. And Carly, another thing that I want to let people know that I'll be working on here shortly too, Carly, because as you know, I'm a veteran and I'm seeking programs for veterans. And what I came across too is adaptability programs that's available for our veterans, where if they're in a home or they're trying to purchase a home that, let's say they're in a wheelchair and they need a wider doorway, or their bathroom is just not suitable for them, where they have a tub instead of a shower. There are programs that the VA has that I don't think a lot of veterans know about. I didn't even know about them until I just recently had a buyer, Carly. This is what blew my mind. I had a buyer that the VA ended up giving them $109,000. $109,000 is a grant that the VA has, right? And it helps with their adaptability of their home. They would love to catch it before they build a home. But let's say, for instance, I'm going through a transaction, which I was, and they like this home. So the VA say, okay, no worries. You go through the process. They have a VA counselor that comes. They have a checklist of certain things that has to be met in the home. And let's say, for instance, his doorway just wasn't wide enough. And this house in particular did have a shower. I'm sorry, it had a tub, but not a shower. And then the doorway for his room was also not wide enough too. So all of that they're going in to do, but then the kicker, Carly, right? Remember I told you $109,000, right? But those renovations was going to come up to maybe $50,000, right? The VA then allows them to use whatever remaining funds to pay down their principal.
Oh, wow. Okay. That's a lower monthly payment right there. Amazing.
So think about that. And so if they're able to catch a home from the ground up that's being built, then they're able to then put all the adaptable living in that home up to $109,000. And I was like, oh my gosh, wow.
Wow. I've never heard of this.
Never heard of it, but you're going to hear about it a lot now, honey, because I'm shouting it. They even have the adaptability. I've always heard about the one for the vehicle, right? I've always heard about the adaptability for the vehicle that the VA helps with. But the house, I've always heard about, oh, they can do a ramp here. They can do a sink there. Never have I heard anyone go into detail. But it's like I said, it's not until I was able to help someone physically, personally for myself, and I went through the entire process with him, and I'm like, I am sharing this $109,000, and it's real. It's a grant. So they don't have to pay it back.
Oh, that's amazing.
So if you know anybody, Carly, if you come across any veterans, let me know. I'll let them know the forms that they need to take. I'll take them through the process. The counselor don't want them just reaching out to them personally, because then it's overwhelming them. So here I am trying to be a liaison between them and the counselors. You feel me? And I'm ecstatic, and I cannot wait to just share this information with people. I just got it fresh, so it's not like something that I just knew about. So as I know more, I'm gonna share.
And one last thing, because I know we're getting close on time here. Another thing in Florida that I think a lot of people don't know about with their veterans is if you are on disability, and your disability is, what's the phrasing? Permanent in total.
Permanent in total.
Permanent in total. You also qualify to have your property tax bill erased.
Oh, yes.
So even though you may have to qualify, I've seen it go both ways, but you can then that again takes away from your monthly payment, right? So because your property tax bill can be several $100s a month, especially if you're getting up into the higher priced homes. Like we're looking at one right now where the property tax is what, like $7,000 a year, something like that.
Yeah, 10 with the CDD.
And then the CDD, yeah, I don't think we can get rid of that with the veterans thing. But yeah, it's another thing to keep in mind is if you are a disabled veteran and you are permanent and total, you may very well qualify to have your entire tax bill erased. So another savings that people may not know about. I don't know if it's every county in Florida, but I think it is.
Yeah, I believe it's the entire state of Florida.
Yeah. So there's another savings for veterans. If you are a veteran, you have no excuse.
I love it. I love it. It's so much free money out here, y'all.
As it should be.
Is.
As it should be.
As it should be. Right. Yeah. That's how I feel, Carly. And that's why I really, really have really honed in. Not that I don't want to work with everyone else, but please understand I'm a veteran. And so I just know that there's so many times veterans get, they don't get the information, all the information to serve them, right? They get out the military like I once did, got out the military, and you're like, where do I start? Where do I pick up? Because people don't understand that life inside the military is a whole world, right? It's different than outside of the military, which is a whole nother world on its own, right? So now we get out of the service and now we need to navigate this new world and we don't even know where to start. And so here I am knocking on the door like, hey guys, over here, let me show you how to get yourself a home. Let's start there. Right? Let's start there. Let's get you into a home and start building equity. Equity is my big thing. I've learned this thing called equity and I'm not letting it go. Not letting this equity go. Okay? That is money that you build for generational wealth.
That's your money. That's equity is your money in your home. You can pull that money out when you need to. And when you go to sell your home, that is your money. That is yours. And yeah. Build that instead of paying somebody else's mortgage. Don't pay your landlord's mortgage. Pay your own.
Pay your own. And we're going to end it on that note because that's where it's at the end of the day. Pay your own mortgage and stop making someone else rich at the end of the day.
One way or the other. You're going to pay your rent and you're going to pay your mortgage or you're going to pay your landlord's mortgage. It's going to be one of the two. Unless
one of the two.
Family, then you're paying somebody's mortgage.
That part. That part. Okay. So without further ado, unless we have any other questions around here, which I don't see any questions on my end, Carly, then we can just go ahead and just say this was a great live here. Some good information, down payment assistance programs for anyone out there that needs down payment assistance programs. So next month we'll be doing this. We'll announce the date for next month, guys. So tune in. Share this with your family members, your friends, those that are looking to purchase. Share this information with them. Let them know that Carly and Keneshia will be at it again next month, baby. All right. So we're going to go ahead and end this live, y'all. If you have any questions, remember, reach out to us, DM us. I understand you don't want to be on the big platforms with your business out there, but just DM us in private, y'all. We'll reach back out to you. I promise you. All right.
These are cell phones. You can text as well.
Yeah, and text. And text as well. Our information is all online, guys. So just reach out to us. We'll get back to you. All right. Well, happy house shopping to you guys. And we'll talk to you all soon. Bye, Carly. Thanks, hon.
Bye, lady.
Bye-bye.